Hello and welcome to The Business. And I'm joined now by David Smith from the Yorkshire Bank. How you doing, David?
Very well, thank you.
You've done really well. You're quite high up in the bank now. Where did you start?
I suppose, Graham, I started like everybody else as the trainee first day at the bank, making cups of coffee for the people that do all the hard work. And then just a natural progression over the years through working behind the counter, various support functions within the bank. And then once you get your foot on the managerial ladder, it's just a case of hard work, always challenging yourself and learning from good people and progressing on up.
So, the state of the banks in the UK, David, good or bad?
Moving forward, obviously been a lot of recapitalisation over the last 18, 24 months. Some banks have been assisted by the government, but clearly, as we've just seen today, with both HSBC and most recently Barclays announcing the latest profits, there's now profits flowing back into the banking system. Bad and doubtful debts are reducing, and that's all good for the economy because the economy needs a healthy banking sector.
Is it going to be any easier then to lend money from the banks?
This is a tricky one because most banks have never been actually closed for business. The challenge has been with the increased regulatory observation from the likes of the FSA and the requirements to hold more capital. It's actually more expensive for us to lend money now than it's ever been before. The amount that we have to put on one side to protect our balance sheet when we make loans available inevitably has made capital more precious, and as a consequence the margins have increased. What we have actually seen, which is really interesting when you talk about are the banks open for lending, is in fact a lot of the big corporates are actually deleveraging, are actually looking to borrow less. The real difficult side of the market is the small business and startups.
That's where we are, really. I mean, what tip would you give a small business then if they're going out to lend some money?
A good business plan is actually critical, and that's not because the banks always want a business plan before they lend. There's a bit of a misconception here that it's the banks that ask for the business plan because we need it. But actually, if you think about it, any businessman starting up would have a plan. It's their roadmap. You wouldn't go on a journey around the world without planning. What were your key stops? When do you expect to get there? And that's what the business plan's all about. It's signposting. What are the key events in that business so that they can assess how they're doing on their road to success.
So you've got the person's business plan, and we have that facility on the business whereby we've got a video for it and some literature there you can download to help you and assist you in building your business plan. We've got that, David. Now we've got the meeting with the bank manager. And what things will he be looking for within that business plan to really make him a bit more secure in giving you money?
A number of things, really. Let's start with the assumptions behind the business plan, because there'll no doubt be some financial figures in there in terms of the profit and loss, and a real key understanding of what assumptions have been made to back up that projection, but also a good understanding of what experience they have in that sector, what research they've done into whatever products or markets they're looking to go into. And really, as most important, contingency plans, because we all set off with plan A, but you and I both know, have been in business a long time, things come out of left field, can throw you off track, and it's very important that they have that plan B and C, that contingency, clear in their own mind so that they can adapt to anything that comes out of the woodwork.
Banks or investors aren't really interested in lending to people that haven't got in-depth experience in the field. This is one thing that we are seeing. You'd concur with that, David?
It does make it more difficult because when you do any kind of strength and weakness analysis, actually the experience and the quality of the management for us as a lender is absolutely critical. And this is why when the likes of the venture capitalists get involved in the bigger deals, they normally have a non-executive on the board so that they can monitor the progress of that very carefully, because management ultimately is the key to the success not only of the business but also to the success of our borrowing being repaid.
Yeah, I think it's always good to have a good management team in place, isn't it? I think that reassures the banks as well, doesn't it?
Absolutely critical. Not over-reliant on one individual, a team around them, because as we all know, input from a variety of sources helps the business go forward, different ideas, different perspectives, but also it helps cope with things like illness, and also allows the business owner some time off as well, because a healthy work-life balance is critical.
From a banking point of view, a bit of interest here then, David. What's been the worst day in your banking life?
The worst day? I suppose the one that sticks out, well, there are two that stick out actually. The first one is the very first bad debt that I incurred when I'd made the decision and the business went under. That's a pride thing, isn't it? You know, you've lost money. The second thing is a real strange one, in that I had to leave a meeting once between a father and a son, where there's quite a difficult discussion. The business needed to change direction, and I left the meeting saying, this is something that you need to sort out amongst yourselves. And then the next day I got a call from the police, because following the meeting, son had shot his father, killed him.
You joke.
So very often we have a bit of an after meeting briefing, but it's the first time this has involved the police. I don't normally have that impact on people, by the way.
I would imagine that's a real horrible side to being a bank manager, because everybody looks at it and says, oh, the bank manager wouldn't give me this or they've done that. But you've got to look at it from the bank's point of view to secure their borrowings, and sometimes you have to make those really difficult decisions for businesses.
Absolutely. At the end of the day, we are the guardians of the bank's money. We're responsible to the shareholders. So it's incumbent upon us to ensure that we take as prudent a perspective on risk as we can.
There'll be people out there, David, that are sat there with a small or medium business thinking, well, I'm having trouble getting money. And why is that? Because I haven't done anything wrong. I want some more money to fund my business. I've got a mortgage on my house. And it all seems to go wrong in America with this subprime thing. So just explain to me, what's subprime and how did we actually end up where we are now?
Well, that's the $64,000 question, Graham, that you're asking there. And it's been covered a lot in the press, and there are a whole variety of reasons. But I suppose the crux of it was ultimately greed, human greed, which starts really at the beginning of the chain, would be the requirement, people continually looking for an improved return. So people then try to become more creative in generating the return. And sometimes what happens then is the traditional prudent conservative approach starts to get stretched a bit at the edges. And a prime example of that would be self-certified mortgages, where individuals are coming into a lender and actually the lender is not really doing any true due diligence on their ability to repay the debt. And that's really the main fundamental that everybody should look at. It's not always about the security. The first port of call has to be, is it realistic for this individual to repay it?
So it really happened more so in America then first?
Well, it started in America, but obviously the UK had gone down the self-certified mortgage route as well.
Is that something now that's been like outlawed? Is it illegal to self-certify now?
I wouldn't say that it's illegal because I'm not aware that any legislation has been passed, but in terms of a good practice across UK funders, I'm not aware of anyone at the moment who's actually going down and approving self-certified mortgages. It's clearly that was a mistake in the past and not something that as an industry we want to make again.
Did you see a massive rise in small businesses going to the wall?
Well, it didn't happen overnight. I mean, this was really down to capital and bad debts, and you'll have seen all the major business failures. What tended to happen was that a lot of the support for small business was inevitably supported by way of charges over property. But that in itself didn't cause the failure of those businesses. It was actually a flaw either in the economy or something that happened that changed the cash flow dynamics of the small businesses, whether it was that larger businesses were going into liquidation, weren't able to pay the debts, and then you get the domino effect of people not being able to meet their debts going all the way through the supplier chain. But cash started to dry up. There was pressure on businesses being able to meet their own expectations of sales and income levels. And as a consequence, inevitably that feeds through to, I run out of cash to run my business. Can I obtain some more cash? Now, if the business owner has really pushed the equity in their property to unlock the support for their initial funding. When the property market starts to come down, the only other option for them, that equity in their property, has been reduced. Therefore, it's difficult to go back to the well and drink from it a second time. Because again, ultimately, what we're saying, if business is in difficulty, going back to an earlier question, when they're looking after the bank's interests, its interests of its shareholders, we need to ensure that if, in a worst case scenario, the business failed, that there is another option for us to recover the money that we've lent.
I suppose that the big tip I seem to get from people like yourselves, though, David, is that when people are putting the plan together, is really do not be over optimistic. That seems to be the one piece of guiding light that seems to be prevalent throughout everybody that we talk to on the finance side.
That's absolutely spot on, Graham. Otherwise, you're just kidding yourself.
Is the UK business banking sector open for business?
Absolutely, Graham. I can categorically support that. Just committed for 2 years ago now, Yorkshire Bank committed to make £10 billion available into the marketplace for the small and mid-corporate market. And I'm pleased to say after 18 months we're pushing up to 8 billion in that respect. So we're well on target to do that, with another 2 billion at least to go out between now and the end of September 2011.
So Yorkshire Bank are definitely up for business.
Absolutely.
And hopefully the rest are as well. Have you enjoyed your time in banking?
Yeah, 33 years now. I wouldn't have spent 33 years if I hadn't joined it, because you don't carry on doing something that you don't enjoy. I've learnt a lot. I've worked with some great people, and it's helped me by learning from those people to progress in my career.
Well, let's hope you're on for another 30 odd years anyway.
Thank you.
Thanks for joining me. David Smith, Yorkshire Bank.
Thank
Always
you.
a pleasure, never a chore.